Welcome. In this video, will Zbcn coin continue to rise? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most prominent technical structures that stands out upon analyzing the chart is a well-formed, healthy, and consistent ascending trend line that the price has respected for a long time. Such ascending trend lines indicate that investor interest in buying remains strong, the market generally has an upward bias, and the rally is developing in an organic and stable manner. In other words, the price is progressing step by step within an upward channel. These types of trends not only indicate the current direction, but also offer important clues about potential support areas. This is because the trend line has been tested multiple times over time, and buyers have consistently stepped in at this line. The ascending trend line shown on the chart has a very orderly and symmetrical structure. In the past, the price has touched this line several times, and each touch has been followed by a notable upward movement. This clearly shows that market participants take this trend line seriously, treating it as a kind of psychological support level. These types of upward trend lines that act as support are especially important for medium and long-term investors, because every dip to this line is seen as a new buying opportunity. Looking at the current technical setup, it appears that the price has moved away from the trend line. However, such a move is usually temporary, and the price tends to gravitate back toward the trend line over time. Trend lines act like magnets in technical analysis. No matter how far the price moves away, it often returns to revisit this area. Therefore, in the upcoming period, there is a strong likelihood that the price will touch this ascending trend line again. And if this touch happens, there is a high potential for another strong reaction, just like in the past. These types of bounces from the trend line are often powerful and sharp. Since the overall market trend is upward, buyers see this support line as an opportunity and enter the market aggressively. This not only leads to a bounce, but can also trigger a new wave of upward movement. This new wave often targets the previous highs of the trend, and in some cases, can even surpass those levels to create new highs. Therefore, approaching this ascending trend line may not only present a short-term bounce opportunity, but also mark the beginning of a larger bullish movement. Additionally, trend lines are not only about technical analysis, but also about investor psychology. Every time the price touches the trend line, investors' expectations that it will rise again from here increase. This expectation boosts buying pressure. In other words, the strength of the technical setup combines with the belief of market participants to generate even stronger reactions. Especially professional and institutional investors closely monitor such trend lines and often execute strategic buys at these points. Although the price currently seems to be a bit far from the trend line, this does not diminish the validity of the trend. On the contrary, the further the price moves from the trend line, the stronger the impact of a potential future touch may be. This is because such trend lines serve as important directional markers for where the price could head. In technical analysis, the reliability of such support and resistance lines is most clearly understood in the areas where the price reacts. If the price returns to this trend line in the future and finds support there, it not only confirms the reliability of the technical analysis, but also generates a new buy signal. But we can't make decisions based solely on trends. So let's also take a look at other metrics. Stay tuned. When analyzing long-term wave structures on the chart, it becomes clear that the current price movement has reached a highly significant stage. According to Elliott wave theory, the analysis shows that the price is currently in the third major impulse wave, which is an extremely critical and decisive phase. According to Elliott's rules, this third wave is typically considered the strongest, most voluminous, and longest-lasting wave. It represents periods when investor confidence in the market is high, buying appetite increases significantly, and overall market sentiment turns positive. From a technical standpoint, the third wave is often characterized by high momentum. This is because after early buyers enter during the first wave and a correction occurs in the second wave, new investors begin to take positions, which adds strong buying pressure to the third wave. A similar scenario is currently unfolding. As the price continues to rise within the third wave, it is approaching one of the Fibonacci projection levels, 1/618. This ratio is frequently considered a target for the third wave in technical analysis, and is also known as the golden ratio. If the price manages to break above this level with strong volume, it could trigger a new bullish wave, not only technically, but also psychologically. While the 1/618 level is seen as the minimum target for the third wave, if this level is surpassed, attention will shift to the next major Fibonacci projection level of 2/272. This level tends to emerge in scenarios where the third wave transforms into an extraordinarily strong impulse with much more aggressive price increases. If the price moves toward this 272 level, it will be a highly positive signal not only for short-term traders, but also for those implementing medium and long-term strategies. In this context, it is crucial for investors to closely monitor price behavior around the 1618 level. This area is not only a technical target, but could also serve as a psychological launching pad if the price breaks upward without signs of weakness or low volume. If such a breakout occurs, the price could head toward the 272 level in a much faster and more determined manner. Reaching this level would not only confirm the strength of the third wave's potential, but also present significant profit opportunities for investors before the fourth wave correction begins. Moreover, due to the nature of the third wave, price movements are typically strong, high volume, and aggressive. This causes pullbacks during the uptrend to be short and shallow. Even if technical indicators approach overbought territory, during the third wave, they can remain at such levels for extended periods, confirming the strength of the trend. Therefore, investors should interpret traditional overbought signals with caution during this phase, as conventional indicators may become invalid. It is also important to remember that the current third wave is part of a larger five-wave structure. When this structure is completed, it implies that the price may move even higher. The fourth wave that follows the third wave brings a correction, but it typically does not result in a destructive pullback. This is because buyers who entered during the third wave tend to hold their positions strongly. The fifth wave that follows then pushes the price to new highs. Analyzing the indicators on the chart, it is especially noticeable that the Vortex indicator has started to generate extremely positive signals. Vortex is a reliable tool that visualizes the direction and momentum of the trend with two separate lines: blue, which usually represents buyer strength, and red, which represents seller pressure. The fact that the blue line is now decisively positioned above the red line is a very strong signal that the market balance has turned bullish. This is not just a short-term burst of momentum, but a strong demand dynamic underlying it. In the vortex, the blue line crosses the red line and moves into the upper zone, indicating that the buy side is dominating the market and controlling the momentum. Moreover, the longer the blue line persists in this upper zone, the more stable and deeper the uptrend is considered to be. Past statistical analysis has also shown that during periods of its persistence in the upper zone, the price usually not only breaks through existing resistances, but also searches for new highs. Looking at the vortex's alignment with the current price action, it appears that the VI plus line is not only on the upper side, but also has a steep slope. This slope emphasizes the growing buyer momentum and the concentration of new capital entering the market. Vortex allows us to see trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.